Hello friends, welcome to Weekend Investing Daily Bytes. We are shooting episode 302 and today we are going to talk about PSU banks. PSU banks have been in a major up move very recently and in the last few months, but if we see from a long-term perspective, it has been a lost decade for the PSU bank so far. So we will try to see from a long-term and short-term perspective where they stand and what kind of potential we may see for this sector. But for today, as you can see in today's move, PSU banks took the lead, mainly followed by SBI results and several other results from PSU banks, all showing fantastic margin growth, reduction in NPAs and good credit growth. So PSU bank sector is up 4.5% today. Metals continued the rally at plus 1.6%. Metals are now up 9% for the week. That's an amazing run. There is talk about China opening up, but then there are rumors of, that talk being just a rumor. So we really don't know what happens, but Hong Kong markets are going up despite the talk of no opening up. So there seems to be something brewing, which is causing the metal space, commodity space, and the beaten down stocks to jump up. Autos also up 1.3%, real estate up 1.1%, and several of the other sectors, as you can see, went up 0.2 to 0.8% up. The only sector which was in the red today majoritarily was pharma at minus 1.4% with very poor results from Divi's Lab in particular. Overall, in the last 1 week, PSU banks have done plus 6.6% and metals have done plus 9%. These two sectors have really shown out in the last 1 week. In terms of the broader indices, you can see that Nifty closed almost 0.5% up along with Nifty Next 50 and the other two broader indices, CNX 200 and 500. But mid and small cap index and the small cap 250 were the two indices which took a slightly better gain on the market today, having been dull for the last several sessions. So this has they come back a bit and and trying to have a trend upwards now at plus 0.75% on both of them. And as you can see in weekend investing strategy performances also, MI Evergreen, MI NNF10, MI 30 all doing quite well, and several of the strategies were above 0.75% up to 1.5%. MI 25 was a major laggard today, down or gaining only 0.24%. But other than that, most strategies did well. In terms of the heat map of the day, State Bank of India, you can see, was up 3.4%. So major leader for the day was State Bank of India. You can also see smart gains on steel, aluminium, and some motor stocks. Auto stocks, so Eicher Motors, Tata Steel, JSW Steel, Hindalco, they were all went up. Adani Enterprise has been going up dramatically, now nearly 4,000 rupees. So I'm sure Mr. Adani again moves to number 2 in the Fortune 100 list of most wealthiest people. That announcement should come soon with Adani Enterprise moving up. BPCL up 2.79%. Britannia was a major gainer at plus nearly 9%. On fantastic results. In terms of top gainers in top 500 universe, NIIT jumped 12.7%, JM Financial was up 10%, Rail Vikas Nigam was up 10%, Bank of Baroda and Britannia up 9.5% and 9% respectively. Divi's Lab, as I mentioned, poor results, minus 9%, very, very poor chart as I will show you later in the show also. Marico down 6%, Vedanta down 5%, Alembic Pharma down 4.5% and Shipping Corporation losing 3.3%. These were the major losers. So the question that we were asking today is, will it be a decade for PSU banks? So let's see what PSU banks have done so far. So in the last 15-17 years, the PSU bank is this blue line at the bottom. The black line is the Nifty and the orange line is Nifty private banks. So you can see up till 2009, up till about this area, they were pretty much in sync with the rest of the market, but post that private banks really took off in a different trajectory, while PSU banks remained with Nifty till about 2011-12 and then underperformed the Nifty in a very big way. So something happened in 2008-9, major losses, major NPAs, and then of course phone banking in the pre-BJP era, 2010 to 2014, really made a huge impact on the future potential of this industry, and it has taken these 5, 6, 7 years for it to recover from all those malpractices, and possibly now are in a shape to look up at least for the first time. This is the sort of the focused chart that will show you that since 2011 PSU banks have been continuously under this falling trend line, and only after this entire decade has gone by have they actually been able to really break out from this trend line, and hopefully this trend can continue for a new high sometime in next few years. But you can see the kind of dramatic loss of market cap that this sector has seen over time. Now since May 2020, the COVID period, you can see that PSU banks have done quite well, plus 239% versus Nifty at 105%. So quite a good outperformance versus rest of the market. And since very recently, June 2022, they are up 60% versus Nifty at 18%. So last 2-3 years has been the that base formation for PSU banks to build a strong base, and then possibly have a nice run up from here on. Results are optically looking good now. We are sitting in November 2022, but the trend started to form several months back. So for instance, Bank of Baroda, Canara Bank, State Bank, Union Bank, all these many stocks started coming into our momentum strategies from much earlier period, and we are enjoying running on these constituents in all cap, EverGreen, NNF10 and several other strategies. So momentum basically is picking up these trends much ahead of when it becomes optically obvious, and that's how the rule-based investing really works, is that it enables you to come into sectors which usually you are fearful of, and you may not be able to guess or forecast that this sector will go up, and then it will take you out of sectors which are still looking good optically, but then 3 months later you will find out, oh, this sector was really going down and I couldn't see it at that point of time. So that's what rule-based investing does over and above in a much better way than discretionary investing, which involves a lot of our own biases, lot of our own assumptions, etc. Another sort of theme that is playing out in the market, a lot of people are talking about small caps are underperforming, small caps are not doing well. So you have to see it from a perspective of what small caps have done in the last few years. So this is a chart from pre-COVID period, and you can see that from January 2020 till now, which is almost 3 years, just 2 months short of 3 years, small caps are up 107% on the small cap 250 index. Nifty is up 49%. So after Nifty hit a high in October 2021, Nifty has kind of crawled back to its all-time highs, whereas small cap index hit a high in January 2022, and it is still about 10% lower than where it was. So nearness to ATH need not be the only reason why you may say that some things are underperforming. So while Nifty is near its all-time high, but small caps are already up 107% versus Nifty. So from that perspective, small caps have not underperformed over a period of time, but yes, they are currently a bit lower than their all-time highs. And once this whenever there is a huge move that happens in any sector, it takes time to digest that. So this huge move that happened from here to here is taking the time to digest this move, and then once it is digested, it may move up again. So my sense is that small caps are not really underperformed, but they are just in that cooling off phase where they're digesting the gains from the ferocious run that happened before. Another perspective on particular stocks. So Alkyl Amine came out with results today, and most analysts were mentioning that the results were not so good. So another sort of insight that I want to give you is that momentum is identifying stocks much ahead of results going bad, for instance. So the cream of the move started in May 2020 when MI25 caught it, and then it went up all the way to almost 4750 from a level of nearly 600. And then of course it gave back and we got out somewhere here. And this 16-month move gave us a gain of 440%. And it has been just doing, a sideways move or a very weak move since then. So the idea is to get out of, fast movers once they sort of give up the strong momentum, and then use that capital elsewhere. Because now see, we have moved this capital from September, October 21 to other places, and we may or may not have made a lot of money on that capital, but at least in this particular stock, it would have lost another 20%. So this is how effective and efficient use of capital happens in momentum investing. Another sort of story of Divi's Lab, you can see how strongly the stock moved from 2020 1750 till 5500. And then of course it gave it up, and then it was a lower high and a lower low, and another lower low is about to form. So it's a very nice downward trending channel, and I suspect that this gap here may get filled. So we may potentially be looking at 25-2700 levels also maybe. So why be in so much pain? I mean, if we were riding momentum in this, maybe we would have gotten out somewhere around here and not have had to bear all this pain. So while a lot of bearing of pain may give you very good results over 5, 10, 20 years, it may be possible, but then living your journey through pain is not everybody's cup of tea, at least not mine. I would like to have lower returns but lesser pain and more surer returns. I don't want to see stocks in my portfolio down 40, 50, 60, 70, 80%. That is not something that gives me pleasure. What gives me pleasure is that I am riding the winners. If they are not winning anymore, I am out of it and I am looking for next winners. So that's the strategy that at least I wish to deploy. So this is the disclaimer for the company and for these videos. These videos are not advice. These videos are not meant to recommend anything. These videos are more of educational thoughts, I would say, based on our experience, based on what we are doing in our products, and you must consult your financial advisor before taking any action based on these videos. If you like these videos, please do press the like button. If you have not subscribed to this channel, please do subscribe to it if you like the content, and if you already like the content, then please share it with your loved ones, because they also need to get to some good information and knowledge about the markets. Everybody needs to get to newer concepts of the market and open their eyes and minds towards newer formats of investing. Everybody cannot be stuck in doing buy and hold like 99% people are. So please do widely share these videos. That's the sort of only request that I have of you, so that more and more people can make use of this content that we get together. So thank you so much for your time, and I'll see you in another video. Bye.